Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
Welcome back to another episode of Equity Mates. We're coming to you live from Bryce's lounge room, actually, from my lounge room.
Am I still guessing who you are to intro this episode? You are Ham.
No, look, we have just finished the Sohn Hearts Minds Investment Leaders Conference that was held at the Opera House. And I'm sitting here with Ren, and we are going to give a bit of a debrief on what happened today and draft the 16 stocks that were pitched by some of the globe's best investors.
So for people who aren't familiar, Hearts and Minds is a listed investment company that 12 fund managers pitch their best ideas. That gets rolled into a fund with some other investments from the core managers. Rather than taking a management fee, they donate that management fee to medical research. $60 million has been donated. I think it's been running for, 7 or 8 years?
Yeah.
But they also hold the 12 fund managers pitch at this conference that we went to today, and they donate the ticket money from that to medical research as well. So it's a great way for expert investors to donate their knowledge and create value that then goes to a good cause.
Yes. So it's the first time that we have attended the conference in person. We have been lucky enough, as you would have heard on episodes over the last few weeks, to have some of the experts on the show. We had Rikki Bannon, we had Ashish Swarup, and we had Tom Naughton, all pitching stocks. So in today's episode, we are going to draft the 16 stocks one by one, create our own portfolio.
Yeah.
We're going to recap last year's draft, see who came out on top.
Yeah.
But to kick things off, there was more to today than just stock picks. We heard from some fantastic medical researchers and leaders in the field of quantum computing, brain cancer, treatment. It was pretty fascinating. So what were some of your kind of takeaways, Ren?
Yeah, I think the 3 most impressive presentations were probably the medical researchers. The line that stood out was, "We have cured brain cancer."
Yes.
In mice.
Well, I mean, yeah, regardless if in mice or not, it was a pretty phenomenal statement.
Yeah, there was Peter Attia, who I hadn't heard of before, but
No.
Simon from our office messaged with Peter Attia, exclamation mark. He obviously had heard about him before. He's all about extending human life and the quality of life.
Yeah.
Medicine 3.0. Then we heard from a researcher who's working on brain cancer and I guess novel ways to use the body's immune system to fight that cancer. Pretty cool stuff there. And then, as you said, quantum computing. So pretty amazing.
Also the genomic medicine. We heard from a guy who was talking about the intersection between, I guess, using genes for treatment, as well as the overlaying data science with that and what it can do, and was talking about case studies of how they had manipulated human genes to essentially solve or cure a number of debilitating diseases. So I think my takeaway with all the medical stuff, Ren, was that none of it was out of reach, sort of, this is just fantasy, this is what we can hope for. It was very real medical research and proven results, and it was super, I guess, heartening to see that, the funds that are going towards this research are having a meaningful impact.
Yeah, it's pretty amazing.
Oh, yeah.
Hello.
My wife has just walked in the room, Harriet, and it is actually Ren's birthday today as well.
Would you like to
say happy birthday?
Would you like to sing me happy birthday?
No.
All right, Bryce. Yeah, it was an epic day, and we're going to draft all these stocks later, but rather than teasing it throughout, let's just let's list the stocks that were pitched today. And then if you're listening along at home, you can start to think about what order you would draft these stocks. So some of the names were new, some of them were quite familiar. Ashland Global was the first pitched. Canon, the printer maker, was a short. Telix Pharmaceuticals, Swire Pacific out of Hong Kong. NexGen Energy, a uranium company. Guzman y Gomez, one that I actually just ate after the conference. Bed and Body Works, Unicredit.
I think it was Bath and Body Works.
Bath and Body Works, what did I say?
Bed.
I was thinking Bed, Bath and Beyond.
Yeah.
Unicredit, AIA Insurance, Miniso, Resmed, Lamb Weston, Games Workshop, Webster Financial Corp, the Greyscale Bitcoin Fund.
Classic.
And then finally Wise. So that's 16 stock pitches. Some of the names I certainly wasn't familiar with, and we can unpack them a little bit more when we draft them. Some interesting companies pitched today.
Interesting companies and some great experts. We had Rikki Sandler from the US. We also had Cathie Wood joining from overseas in video. So she really spoke well over her 8 minutes. We had Dan Loeb from Third Point Capital, plus many more that we'll go through soon. So before we get into the draft, let's have a review of how we went from last year, because we did this same exercise after last year's HM1 conference.
Now, I've just opened it. So, can you see my screen, or have you got it up there?
I've got it open, yeah.
Okay, well, the headline is two key headlines. Number one, I won.
Yeah.
Number two, we were both down.
Yes. Yes. So
Can I just say before you unpack it, producer Sasha went to the Facebook discussion group and polled them who do they think won. 65% said you.
nice.
Well, I say to the 35% that backed me, I hope I did repay your faith.
Nice. Well, I'm down 9.9%. Ren, you're down 4.4%, 4.7%. I mean, a lot of companies in here. In mine, we had ASML, which I am guessing is why a lot of people suggested that I would win. Nike was in there, but a couple of my positions, Keyword Studios and Darling Ingredients, both down over 40%. So that was a real drag.
Yeah, your best performer was an ASX-listed stock, Champion Iron, up 27%. But yeah, down almost 10% at the end of the day. For my side of the ledger, my worst performer was down 50%, China Tourism Group. That one hurts. That was my second draft pick. But New Relic was up 52%, and car sales listed in Australia was up 30%. Overall, I was down about 5%. So the stock pitches last year didn't exactly cover themselves in glory, but it was a pretty tough year.
It was. But let's get to today's.
Let's get to it. Before we draft, Bryce, we should make clear that you're about to hear 16 stocks that were pitched by experts today, but they aren't aware of your personal financial circumstances. Do not take their pitches as personal investment advice. Do your own research. Seek professional advice if you need it. And as we talk about it, remember that this show is intended for education and entertainment purposes only. With that said, let's get to the draft. How do we decide who goes first?
Well, it's your birthday, so you go first.
Okay, great. I haven't decided how I want to go. All right. First pick of the draft, I'm going to pick the worst pitch, but I think in terms of the next year has the best opportunity to mean that I win this.
Okay.
I'm going to pick Cathie Wood's Greyscale Bitcoin Investment Trust. Cathie Wood's pitch reminds me of a quote that Specky McGee gave us a couple of years ago. I don't want a recession, I want a risk-on session.
Yep.
Her whole pitch was basically, she had this stat that I wrote down because it was so unbelievable. She thinks between now and 2030, honestly, the maths doesn't work, but she said it will go from 84 billion to 97 billion. I think global equity markets, well, they're obviously in the trillions.
Yeah, that's not right.
Yeah. Anyway, she had a number that was like non-disruptive technologies will go from 87 billion to 97 billion. Disruptive technologies will go from 13 billion to 202 billion.
I think they were in the trillions.
They must have been in the trillions.
Yeah, it was trillions. Yeah.
Anyway, it was just basically like her 5 chosen disruptive technologies are going to just create all the value of the next decade.
Yeah.
Now, the Greyscale Bitcoin Investment Trust is basically a listed investment company that only invests in Bitcoin. And so it's just betting on the price of Bitcoin. So right now, Bitcoin, $37,000 a coin. Her base case by 2030 is $650,000 a coin. And her bull case is $1.5 million a coin.
Yeah.
But anyway, let's not talk about Bitcoin. My first pick of the draft, the Greyscale Bitcoin Investment Trust, pitched by Cathie Wood.
Nice. All right. Well, there are a number to choose from here. Keeping in mind that this is a 12-month time horizon that we're talking about, a number of the pitches were given with 3 to 5 year time horizons. I'm going to have to go with Kourtis, and we've spoken about this on the show, is Resmed.
Really?
Yeah.
On the way home, you were saying how you thought it was uninspired pitch.
That doesn't mean that I don't think it's not going to perform. I just thought it was a lazy pitch.
All right, well, give us your 2 cents.
Well, I just think that within the next 12 months, from where it is, unless the thesis is proven that the GLP-1 drugs are much more effective long-term than people think and actually have a much more meaningful impact on Resmed's sleep apnea business, then over the next 12 months, I would anticipate that the market realizes that there's an opportunity there. Pretty simple.
Nice one.
Yeah.
Love it. All right. Well, for my next pick, I'm going to pick the last company that was pitched today, and that is Wise. Now, people might be familiar with Wise from the, if they've traveled overseas, it's probably been recommended to them. The last couple of times I've traveled, I've used it. It's basically like a global, it's like a travel money card without the fees.
Yeah.
With the far less fees. It's a card that you can hold multiple currencies on. And essentially, the way that it was pitched by Kieran Moore from Munro Partners was they have found a way to cut all of the middlemen out of global money transfers, and they're offering it to customers and small and medium businesses. And so if you think about how payments, all the middlemen that clip the ticket on international payments, your bank, the global payment transfer, the other bank on the other side, there's often third-party banks in the middle as well. They've cut all of them out, and they basically manage the liquidity in-house. Wise is basically a giant liquidity pool that holds it in lots of different currencies and just gives you the currency that you need. Anyway, that's not a great description of it. Kieran would do a much better job, but that's what I'm taking as my second pick.
Nice. Okay, so I'm going to go with...
You're already nervous. You picked one company.
Yeah, I might keep this one for later, but the only reason I'm going to go with this is because the experts specifically said that there is a 50% upside within the next 12 months, and that is Ashish Swarup, who we've had on the show, which was AIS Insurance. Now
You mean AIA Insurance?
AIA Insurance. They're an insurance provider for emerging economies, emerging countries, and they provide life insurance, and there's a big sort of insurance protection gap in a lot of these emerging markets, and they play a big role in filling that gap.
Yep.
Huge market in terms of the healthcare insurance. They anticipate by 2030, Asia will be spending $4 trillion on healthcare. It's the fastest growing life insurance provider in India. I'm going AIA Insurance.
Yeah, nice one. For my third pick, I am going to go a company that I don't know if it will have a great 1 year performance, but I thought it was maybe the most interesting company pitched today. It was pitched by Angela Aldrich. The company is Lamb Weston.
Yes.
Now, Bryce, did you know that we are living in the middle of a French fry war?
Yeah, right. I was there.
Well, let me tell you about it anyway. So here are some crazy stats for you. 42% of restaurant menus worldwide have French fries on the menu. 60% of restaurant menus in the US have French fries on the menu. Pre-pandemic, 21% of food ordered globally from like takeaway or restaurants included French fries.
There's a French fry addiction going on.
And America is dominated by 3 major French fry players. It's an oligopoly. Angela was speaking about how it's a rational market, which is a euphemism in investing circles for the companies don't compete on price aggressively.
Yeah.
This company, Lamb Weston, has been beaten down. It was a bad harvest in the Colorado River area where they have a lot of their suppliers are based, and they've seen like earnings compression as a result. They've also been hit by the Ozempic trade. People think that Ozempic is going to stop food cravings and French fry cravings. I mean, it's not the craziest Ozempic thesis we've heard.
No.
But Angela was speaking about how this year the harvest has been great in the Columbia River Basin. Volumes are increasing, that the margins will be improved because it was a good harvest, and she thinks the stock will re-rate higher. But just for me, this is like a classic, it's one of those stocks that you never think about. Who supplies French fries?
I was just thinking through this pitch. Man, she's spent a lot of time thinking about French fries.
I mean, best market research you could do. So anyway, Lamb Weston, that's going to be my third pick.
All right, Lamb Weston is your third, Ren. I'm going to get a bit of diversity in here and get a commodity in, I think, which Candace and Felicity from Talk Money to Me will be, I think, happy with this one. From Jeremy Bond, he pitched a uranium company called NexGen.
Yeah, no, without
Energy.
the T, NexGen.
Yeah, NexGen Energy. Now,
so this is not us name dropping, but we were sitting with Chris Judd for the morning session,
yes.
And as we were walking out, he just said, NexGen is a beast.
He's a beast, yeah. Yeah, there's a great... We met Chris Judd, we met Nick Griffin from Munro Partners, Mark Nelson was there, Solomon Liu, we unfortunately didn't get to meet, but he was in the audience.
Jeff Wilson didn't recognise us.
Jeff Wilson was there. We walked straight past him. But there were plenty of well-known industry leaders there.
You were there, Bryce Lesky.
I was there, which was great to chat to. Anyway, uranium. So NexGen, they're not producing any uranium at the moment here in Australia, but they are on track to be one of the largest and lowest cost producers of uranium at a global scale, with some of the highest quality uranium that you can buy. Now, why is this important? There is a huge shortage of uranium versus the demand that is expected over the next decade. This is why I am going this stock. China plans for 10 new power stations, nuclear power stations per year for the next 10 years. Regrettably, Australia didn't really show up on the map when it came to planned nuclear power stations.
Yeah. NexGen's been on a big run, though.
Yes.
Hasn't it?
Yes.
Yeah.
He did show, Jeremy showed that where the price currently is, he expects it to surpass its previous all-time high of about $140. It's currently sitting around 75, I think.
The uranium price.
The uranium price, yes, not the price of NexGen.
And he did the maths on the mine that they're building. If they build the mine and if the uranium price gets to $100, then it will be the 8th biggest miner in the world. On a free cash flow basis.
And to be clear here, that's miner full stop, not
it's
uranium
like compared
miner.
To like BHP and BP,
Glencore, the rest. Yeah. So look, the risk taking this, Ren, for the next 12 months is that there's not a lot of price action in the next 12 months, but it could be one for the bottom drawer for the next 10 years.
Maybe middle drawer.
Middle drawer.
I think you'd want to check on the uranium story every now and then. All right, we've got 3 each. My fourth one is going to be one that is... I mean, it's just a company I would love to own, and we have no idea about valuation. And we have no idea about valuation because it's actually not listed yet, but it's likely going to list in the next 12 months.
Mm-hmm.
And they actually surprised us. And rather than a fundy pitching this stock, it was the CEO that came out and pitched his own company. The company, Guzman y Gomez, and the founder, Stephen Marks, was brought out and he pitched it. And I mean, I haven't met every CEO in corporate Australia, but I think Stephen Marks would be on the podium in terms of the best seller of their own company.
Absolutely. Highly inspiring, engaging, knows his business like the back of his hand.
Like you finish that pitch and you think, this is going to be as big as McDonald's.
Bigger.
Well, he says it's going to be bigger.
Yes.
Obviously we're all aware of what Guzman y Gomez is. It's got about 200 locations around the world, the majority of them in Australia. They think they can get to 1,000 locations in Australia, and then they're also in, I think, Japan, Singapore, and the US. The US is obviously a huge opportunity for them. Here's a fun fact. They are projected to get to $1 billion in sales this year. The only QSRs, quick service restaurants, that have got to $1 billion in sales faster than Guzman globally, Starbucks and Chipotle. Heard of them?
Yes, very much so.
And you think about some of the big ones that have come, like Carver listed in New York earlier this year. Guzman has grown quicker than them. Like, it's a pretty incredible story. Over the past 3 years, same-store sales growth has averaged 22%.
Yeah, now that's unbelievable.
This isn't just a story of them adding more and more locations every year. 22% average same-store sales for 3 years. Like, it's... I mean, we all know...
50% earnings growth.
The only question is, what's this IPO going to be priced at?
Yeah, that's
and
why.
So, I know that we would have. Yeah, that's why we both weren't going to draft it first, because it might get priced at an eye-wateringly high level.
Yeah,
and then that's my starting price for this draft.
Yeah, because it's a phenomenal business, but yeah, for the purpose of drafting, I did have it in the back of my mind. It could pop. It could get. It's got great consumer brand. You could see a lot of retail guys getting behind it. But the worst case scenario here is that it like IPOs in October.
But you see, here's the thing. Looking at our respective draft boards so far, whatever happens, I'm going to leave today feeling a lot better about my collection of companies.
Why?
I just feel like I've drafted better than you so far.
Who cares? I don't give a shit.
Well, that kind of ruins the game.
All right. My next one is I'm going to back in Rikki Bannon, who we had on the show not too long ago. Again, because of the short-term nature. Well, not the short-term nature, but there are some catalysts that could come in the next 12 months that could send this stock even higher. She pitched Telix Pharmaceuticals. Now, it's a radio pharmaceuticals company that specializes in targeted diagnostic and, I guess, therapeutics by using radiation, like in molecules, I guess, through injection. And so I guess the traditional way of diagnosing tumors and whatnot is through large-scale radiation. I'm not even going to try and explain this.
Keep going.
Whereas this company has the ability to send in molecules that attach to cancer cells and then light up on a screening process. So it's less invasive and much more targeted. And as I said, it has application in diagnosis of cancer, but also treatment. Now, why she thinks that it's going to have, I guess, a catalyst over the next 12 months is because they already have a product in market. I think it's called Illuccix. Can't quite remember. And then 2 other products that are due out in the next 2 or 3 months, plus a pipeline of product activity. So she sees pretty decent upside over the next 12 months.
Now, if you've got your eyebrows raised at Bryce's description of the medical technology of it all.
Not my circle of competence.
When we spoke to Rikki on the podcast, she spoke about another company in the same field, Clarity Pharmaceuticals. So you can go and listen to that interview with Rikki and you can hear her explain how the medical tech works.
Yeah.
All right, Bryce, well, we are each 4 companies down. We have 4 to go. So let's just quickly recap, take a breath. I have drafted Cathie Wood's pick, the Greyscale Bitcoin Investment Trust.
Yeah.
Wise, the payments company, Weston, all about French fries, and Guzman y Gomez, also food related.
Nice. You were obviously hungry at the time of recording.
Yeah, which is now.
Yes. So I went Resmed, I went AIA Insurance, the uranium company NexGen, and then Telix Pharmaceuticals.
Okay, so let's take a quick break, and then on the other side, we're going to keep drafting 8 stock picks to go from the HM1 conference. We'll be back after this.
Hell yeah.
All right, welcome back to Equity Mates. We are sitting on Bryce's lounge. It is a Friday afternoon. We have cracked a beer and we are talking investing. Sounds like the perfect way to end a week. But we've just been at the Hearts and Minds Investment Leaders Conference where 12 of the best fund managers, actually more than 12, 15 of the best fund managers pitched their best ideas. And we're going through the stocks that were pitched. We are drafting them. We're each assembling a team based on the companies that were pitched.
Yep.
We've each drafted 4. We've got 8 companies to go. I guess I'm on the clock.
You are?
That's why I'm padding with this
Let's
extra
go.
long intro. All right, I am going to choose Ashland Global.
Okay.
It was pitched by Rikki Sandler, who we had on the show about this time last year, so you can go back and listen to him. He's from New York. He epic story. He started a fund with like a few $1 million about 20 years ago and now has, I think, $7 billion under management. So pretty incredible. He pitched first today because the way that the conference works is whoever had the best stock pitch the year before pitches first. So he had the best pitch last year, so he was on the stage first. Ashland Global is a specialty chemicals and specialty ingredients company. Basically, they provide the chemicals that like give shampoo its thickness or give skincare its extended release or give a paint its shine. Like all those chemicals that make our ultra-processed society so ultra-processed.
I can cook the world.
And, you know, he reckons that he said that he thinks there's at least 55% upside, maybe 88% upside. I love how specific and confident he is with those projections. But, you know, he really made the case that it's been beaten down recently but it is a company that is incredibly sticky because once you are designed into a manufacturing process, it's incredibly hard to switch you out. And in particular, in their life sciences division, if they are providing the chemicals that coat the pharmaceutical drugs or whatever it is, and then that drug has FDA approval, you can't then switch it out. Like it's part of the approved drug. And so he was just talking about how this is one of those companies that is a tiny fraction of the cost of producing a product, but is critical to that product. And that gives them a lot of staying power. So an interesting one, Ashland Global is my 5th pick.
Nice, Rem. Okay, so we've got a few to go. Not having seen the price charts or price action even in the presentations and how these experts have pitched them, and then comparing that to price charts, like a lot of them are pitching stocks that are all beaten, beaten down.
Well, I think that's part of the pressure of this conference. It's like, don't pitch us your best idea that will compound at 12% a year for the next 20 years.
Yeah.
Pitch us your best idea that will make a positive return this year.
Yeah.
There's honestly an argument that you should just pitch something that will return 6%. And it's just like you're going to make money on it. Like some of the stocks we drafted last year were down like 40 or 50%.
Yeah, I know. But that's because, All right, so speaking of beaten down, you probably can't get much beaten down than some of the US banks. Ravi Chopra, he pitched Webster Financial Corp. I'd never heard of them. His presentation really revolved around what was going on with a lot of the banks over in the US over the past 12 months. $7 billion market cap. His pitch really is, though, that they are the fourth. This is what I did find interesting, is that it's the 4th largest health savings account in the US. Now, the US has a system where, due to their health system, they have savings accounts that are tax-free, that you can save money in that then go towards health payments. Yeah. And this bank is deeply involved in that. The way that the accounts are constructed, at least this is how I understood it, the way that the accounts are constructed is that they have a low fixed payment in terms of interest on those, and then they can make up a huge margin at the moment because the actual interest rates now are in the 5%.
Yeah, so as a customer, your benefit is you can contribute money pre-tax.
Yes.
Like you can direct some of your salary to go there and it's not taxed.
Yeah.
That's the benefit.
Yeah.
So they then don't pay a good interest on that savings.
0.15%.
Yeah, so then the bank makes the spread.
Huge spread, yeah. And so I guess his pitch here is that while a lot of the banks in the US, in the smaller, not neobanks, but the banking sector in the US is incredibly...
Well, here's the stat. The US has 5,000 banks.
Yeah, 5,000 banks. So it's pretty fractured. And while a lot of them are falling down or struggling, he thinks that there's still more to come. He reckons that Webster are one that are well positioned given their place in the market with these health savings accounts and where interest rates are at the moment, positioned to capitalise.
Yeah, so the thing that struck me about this presentation was he argued that there was a 60% upside to the current share price. He was saying that Webster should sell their HSA bank. Like that's what they should do. It's this great business. It's making great returns at the moment. Sell it. And it just struck me as so like short-term investor focused. It wasn't like there's this great business, structural tailwinds, good opportunity. Let's grow the shit out of it. It's sell it. Sell it, realize the money, even though the rest of your business is worse. It was a good stock pitch. It was interesting. It's an interesting way to sort of lean into the difficulties in the the smaller end of the US financial sector at the moment. But the pitch gave me the ick.
Yeah. So did his tie.
That is your comment, not mine. All right, we've got 6 companies to go, 3 each. So my worst performing pick last year was China Duty Free. It was pitched by Jun Bei Liu. But Jun Bei Liu, I'm going to back you because your pitch was one of my favorites of the day. And you pitched a stock that I hadn't heard about, but is... I think the reason that I hadn't heard about it is because I'm getting old. Miniso is the company. Out of China, it operates in 100 countries, including Australia. If you've got young kids or young nieces and nephews, chances are they've probably heard about it. 5,000 stores in 100 countries. And as Jun Bei Liu explained, it's a Japanese-inspired lifestyle store that sells what's cute on TikTok. And the way she described it, it just made me think of Shein. You know how like Shein, the Chinese fast fashion brand, their innovation was supply chain speed? This is that company in like knick-knack retailing. So they deliver about 100 new products to store a week. Like that, how quickly they turn over their stock. And their supply chain is so efficient, they're so integrated with like China's factories that they can go from designing, from an idea to design to product on shelf in a week.
Yeah.
And that's essentially their business, just knickknacks and toys. They've got a lot of IP deals with, you know, the likes of Barbie and Mario, Jun Bei Liu was talking about. But the interesting thing, the reason that they've been able to expand globally so quickly is their business model is, it's like a franchise-like business model where they find a capital partner in each country to fund their expansion. And that capital partner gets about a third of revenue, but then Miniso come in and actually run the stores. So it's not a full franchise model, but it's like someone else stumps up the cash for their model. And then they're like excellent operators and retailers. So company I'd never heard of, physical retail, not an industry that I love, but just an interesting company.
Yeah, fast retail, fast knickknacks. All right, Ren, I'm going to go with...
Not great for the planet, we should call out.
No. I'm going to back in one of the titans on Wall Street, Dan Loeb, from Third Point Capital, $11 billion under assets, $3.3 billion net worth. He knows what he's talking about. His pitch is Bath and Body Works. As he said it, it sells candles and things that smell good. He says it has an obsessive customer base. It's essentially a homewares. Yeah. Obsessive customer base. 50 million customers every month, he says, visit their stores. He said it was it was spun off from Victoria's Secret, believes that there's 50% upside in the stock over the next 12 months. So I'm going to back him in. Let's see how good he can do. It
kind of reminds me of, so you know how all the baby retailers in Australia went broke a couple of years ago and Baby Bunting was like the only one left standing? You know, like Bed Bath & Beyond goes broke in the US. I think they've recapitalized and they're doing something now, but I'm sure there's space in the American homewares large format retail space.
Yeah.
But yeah, not a company that exactly gets me excited. All right, Bryce, for my second last pick, I'm going to pick the best performing stock in the UK in the past decade. Or at least it was a couple of years ago.
Yeah.
This is a stock that wasn't really pitched with any catalyst to perform well in the next 12 months, but it's just a company that keeps on keeping on.
Yes.
It's Games Workshop. For people that played Warhammer back in the day, it's the company that created and make Warhammer. For those that didn't play Warhammer back in the day, it's tiny little plastic figurines that you build and paint, and then you battle other people with them. And they have had such a long history, decades now, and they've got so much IP that they now have like hundreds of books from the Warhammer worlds and video games. And there was an announcement with Amazon earlier this year that they were going to launch the Warhammer Cinematic Universe, similar to the Marvel Cinematic Universe. So I guess they're like a tabletop games company that's now becoming like a IP company in itself. So it's a stock that's up, 8,000% since 1994. It's 80 bagged in that time. Like, it's been a great performer. Yeah, as I said, it wasn't really pitched with any catalyst for this year other than it's just going to keep on keeping on. But hopefully it keeps on keeping on the right way.
Yeah, it was pitched by a guy who had very high conviction. He only has 10 stocks in his portfolio, but I do agree. I didn't see it, to be honest. His whole thing was like, it's just got really low penetration. So there's opportunity for it to go. But anyway.
One stat he said was that, so it's a UK company and its US penetration is a third the UK penetration. US penetration, a third the UK penetration. But part of me just thought, well, like, maybe that's just customer preference.
Yeah, that's what it is.
Anyway.
All right, we've got 3 to go. Oh, my goodness. I'm going to go with the short.
Really?
Yeah.
I've been eyeing that one off as well.
Yeah, I'm going to go with the short. Rikki Sandler, he came in with a short for Canon, which is actually up 30% year to date. So I guess that's why he's putting the short on. But his pitch was that it's in an industry that is in secular decline, which is printing.
Yeah, so Canon's 55% of their revenue is in printing.
Yeah, and
like selling printers to offices.
And pre-COVID, that was in decline, and post-COVID, it's obviously further in decline because a lot of businesses turned to doing business digitally. So there's not a lot to this one. He thinks that it's overpriced and there's only one way for this to go. His thesis was that there's 35 to 40% upside on the short.
Yeah, it's over 30 or 40%.
Yeah.
Nice one. All right. Well, we will watch Canon. I can't say the last time. Oh, I actually did have to print something recently, and it's a nightmare to try and find printers and scanners because no one has them anymore. All right, we've got 2 to go. I get to choose between an Asian conglomerate and an Italian bank. I'm going to choose the Asian conglomerate. I'm going to choose Swire Pacific, pitched by Tom Naughton, who's been on the podcast recently. You can go and listen to him. But Swire Pacific is a conglomerate that has 3 business units. The first is a real estate business unit. The second, it's a Coca-Cola bottler in China, Cambodia, and Vietnam. And then thirdly, it owns a stake in Cathay Pacific, the airline. The real estate business has been unloved because it's in China, and China real estate is not a in favour asset class at the moment. Tom made the case that the China property problem is really contained to residential real estate in 2nd and 3rd tier cities, whereas this is all commercial real estate, a lot of it in some of the bigger cities. Coca-Cola bottler keeps on keeping on. It bottles for a population of 900 million people across China, Cambodia, and Vietnam, so it's big business. And then Cathay Pacific is one of the world's well-known airlines. So that's his pitch. Tom believes there's a 77% discount to the market price. So anyway, Swire Pacific is the name.
Nice. Well, that leaves me with Martin Hughes' pitch, which was Unicredit. As you said, Ren, it's a Northern Italy bank. It's actually on an absolute tear at the moment, so hopefully that continues for me. 70% of its branches mainland Italy. The thesis for his pitch were around that it consistently beats market, that beats expectations, and consistently gets upgraded, and is also on a mission for buyback to the tune of 50% of its current market cap. So significant buyback to come. He reckons the 2-year total return is an upside of about 70%. So if that does pan out, hopefully I'm in for a bit of that over the next 12 months. He did finish by saying, though, that it's a 2 to 3 year trade. But nonetheless, I will take Unicredit.
Nice. Well, that does bring it to an end. If you want to see what we picked, head over to our Instagram. We'll put up a post that has the companies that were pitched and that we drafted, so you can add them to your own watch list and you can do your own research on them. So as we close this out, let's just quickly recap what we drafted. I've got Greyscale Bitcoin Investment Trust, the British company Wise, French fry maker Lamb Weston, the retailer Mini So, Ashland Global, Guzman y Gomez, how could I forget Guzman, and then finally Games Workshop.
Nice. I have sleep apnea maker Resmed, AIA Insurance, an Asian insurance company, uranium miner NexGen, Biomed Telix Pharmaceuticals, Webster Financial Group, Bath and Body Works, the short on Canon, and then the Italian bank Unicredit.
Nice one.
Very diverse.
Well, jump on our socials and let us know who you think drafted better. And I guess we'll pick this up same time next year.
Yeah, yes. Well, what a day. Really enjoyed it. Now, as Ren said at the top, if you want to find out more on the conference or on HM1, you can just head to the Sohn Hearts Minds website. There is a listed investment company if you want to, invest in some of these ideas.
There is one other place people can go if they want to find out more about HM1.
The HM1 podcast that we have done. It's called Hearts and Minds Podcast.
Yeah, produced by Equity Mates. Go and listen to both some of the fund managers and how they approach investing, but also some of the medical researchers and the really epic work that they're doing. I mean, you leave those presentations feeling lucky that we were born today. I think being born 10 years from now would have really been the sweet spot. It feels like we're right before the inflection point.
I was thinking that. I reckon you would always feel that.
No, you reckon?
Yeah, I reckon. Because
it feels like this...
Because every decade, things are just going to get more and more
But you know, it
intense.
took like decades to map the genome, and it cost $3 billion, and they finished it in 2003.
Yeah.
And now they've brought that cost curve way down, and it's like less than $1,000, and they've mapped 50 million people's genomes.
Yeah.
Like now is when it's like, oh, we understand the human genome. You didn't say that 15 years ago.
No, but I reckon every 10 years from now, it's just going to be like, oh,
You reckon there's always something?
Yeah.
Probably.
Like particularly with the rate at which things are advancing.
Well, you know what? This is how we put a bow on this episode. It will always feel like there's something in the next 10 years if we keep funding cutting-edge medical research, and the way that we do that is by supporting charities like HM1.
Nice.
Bang.
All right, well, let's leave it there. Thanks for tuning in. As always, we'll pick it up next week.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.